Check, check, check. 1, 2, 3. Hey guys, can you hear me? Let me know if you can hear me clearly. Give me a sec. I'm also checking that exact thing if you can hear me clearly. Yes, I think you guys can hear me clearly. What's up, guys? How's it going? Wonderful, wonderful, wonderful. How's everyone doing? Very good. We'll just wait for a few more seconds for people to join in and then we'll quickly begin. But how's everyone doing right now? Good, bad, good, bad. How's the market doing? Good, bad, good, bad. Yes, no. What do you guys think how the market is doing? Yeah, good. You guys think the market is doing good? Okay. Yeah, we'll look at all of those things as well. Yeah, market. Yeah, actually, I want to ask this question to all of you guys. Quick doubt and question to all of you guys. How many of you all think that the Indian market did good, bad, or decent in the last 1 year? What do you guys think? Good, bad, decent. Okay, comment below and tell me whether it was good, bad, decent for the year 2025. Was the Indian market, which is Nifty, did it do good, bad, or decent? That's all I want to know from your end. Okay, most people are saying decent, some people are saying good, very few people are saying bad. Okay, most people are again saying decent. Okay, so very interesting. I don't know if you guys follow me on Twitter or not, but I had posted this on Twitter quite recently, which had the entire list of all the winners of 2025 with respect to the US dollar terms. Obviously, everyone compares everything to the world with respect to US dollar. And if you look at the US dollar, right, how did we rank according to US dollar? US dollar itself fell by 8.9% last year, which was very good for the world economy, obviously. It fell by 8.9%. But if you look at the equity markets, the top performing equity market was Korea at 88% and Greece at 82%. By the way, this is the index of Korea and index of Greece sitting at 88 and 82%. Then we go down, we have Spain, South Africa, Mexico, Italy, Brazil. Come down, come down. We have Japan, France, US equities. And then finally, you have India equities as well. But India equities is basically sitting at 2.3%. Now, do you guys think 2.3% on USD terms is good or bad? What do you guys think now? Because most of you guys were saying it is decent. I want to understand from your perspective now. Do you think this was good or do you think this was bad? What do you guys think? Let me know in the comments. Yeah. 2.3%. It is absolutely terrible. It is not bad. It is terrible. Okay. Because the world went ahead. Even the next, after 2.3%, the next biggest was 12.5% at Australia. Literally, the whole world rallied last year. Why? Because when US falls, the world rallies. Simple logic, right? If US falls, all the other currencies become stronger and the foreign investment that is there, the FIIs, they move away to these people, right? That's why they were left US and they went to all the other nations and they made a lot of money because foreign institutional investors are hedge funds, billion-dollar funds. They don't care about any country. They are only investing in money across the world and they make money. It is pure business. It is pure profit and nothing is wrong with that, right? But India was at 2.3%. So nothing to be proud of in 2025. Now, if you look at forex versus USD, all the currencies versus USD, if you look at the currencies, Swedish krona went up by 19%, Mexican peso 14%. This is versus the USD because USD also fell down, right? When USD falls, all the other currencies obviously became better. Franc went up by 13, Euro went up by 13%, Australian dollar went up by almost 8% to the dollar. Singapore dollar went up with USD dollar and New Zealand dollar. Chinese RMB went up. Japanese yen a little bit went up. And then comes Indian rupee at 19th position, second last position at minus 4.9%. Minus 4.9%. Not 0%, not 1%. Even if we were at 0%, we would have been better because US fell by 10%. Even if we were 0%, we would have been good at 10%, but we were at minus 4.9%. And dollar also fell by minus 8.9%. So we were almost down 12%. And that is what you see with the rest of the world, which is so sad, right? Which is so sad. Look at this. This is how Euro INR looks like because Euro obviously became better and INR became worse. And this is how you will see Euro INR. If you do the opposite, you will see it like this in the last 1 year. It was at 88 rupees at the start of the year. Now it is at 105 rupees. Yeah. Terrible. Now, do you think it was good or bad for all the people who sent said decent and all of that? Do you think it was good or bad? Yeah. Now, do you think last year was good or last year was bad? So that's what I said. Last year was terrible, not good. It was absolutely horrible and horrendous, because even if we did not do anything, let's say we didn't give any returns, let's say we gave 0% returns, but we were at least at no loss, no profit, then we would have been okay. 1 second, guys. I have to just give one OTP. Yeah, even if we were 0% returns, we would have been better because we were controlling the currency. Problem that happened this year was not only did our Indian markets do bad, but also our currency fell at the same time, and because of that, both fell down at the same time, and we became the worst performing asset in the entire market. Now, you tell me, do you think FIIs would have come to India or should come to India with this? Tell me. Do you think FII should come to India with this? Yeah, with this kind of a performance? Absolutely not. They should not be coming to India with this kind of a performance. It is absolutely terrible. Now, do you want to think and tell me why did this happen in the past? What was the reason for this kind of a bad performance? And if you guys remember it, you will remember it very well that this was the year of last year. What happened? We were doing well, and then things went bad. It all started in 2024, and it was a spillover effect that happened as well. And when that spillover effect happened, that created a massive issue, right? What was the spillover effect? In 2024, our STT went up, our STT doubled, STCG went up, LTCG went up, all of that went up, taxes became heavy, election season was going on, a lot of money was spent into freebies versus actual GDP growth. A lot of this happened, a lot of that happened. The foreign investors started exiting at the same time. Dollar got into a huge pressure. INR got into huge pressure because foreign investors were selling the dollar and selling the INR and buying dollar, which made it more difficult for them as well, which created a very big seismic impact. And now they're trying to reverse all the. One sec. One second. So now they are trying to reverse everything else, but that is also not working for them right now. Yeah, so now they're trying to reverse. They reduce the GST, rate cuts happened, all of that happened, and that also did not work. Yeah, so this is basically creating a problem, and hopefully we should recover from this. Now, the only thing is, the another overhang is that dollar US tariff is also creating a massive issue in our economy. US tariff is also causing that 50% tariff is creating an issue. So all in all, India is still losing, and we are not able to go forward with the situation. So hopefully 2026 should do better, but it will not do better if these situations don't become better. That is why the first step the Indian government took was to stabilize the INR against the dollar. If you remember that INR USD, right? You saw how that was changing as well. So then they started stabilizing the INR USD so that we don't have a problem. If you remember, it had gone up to 90. It's back to 90. It had gone up to 91, fell down to 89, and then now it's back to 90. Sad, because we are still depreciating. We're still losing. See, now, if your currency is fluctuating like this, why will anyone come? Right? Please tell me that. If you guys, obviously you know, right? If your currency is fluctuating like this, if you are falling so much, why will anyone come to India and invest? Your foreign investors I'm talking about. Look at this. This is your USD INR, right? So this is when the RBI intervened over here. RBI intervened at 91 and then pushed the rate down to 89. But then that was not enough, because then again it started going up. So if I'm a foreign investor and I invest $1 at 84 rupees, and then I get good returns in the market, and by the time I remove that money, it is 90 rupees, and I'm taking $1 back again, nobody will come. So unless we solve all these issues, first thing is that tax that they put on the market, which is the LTCG, STCG, and STT, which was that greedy tax that was put on the market, has to go out first, or else no FII wants to come to India, right? I remember last year, everyone was talking about we don't need FIIs because DIIs are there. They are supporting the market. Great. No problem. You think FIIs care about you? They went to Greece, they went to Korea and made their money. They don't give a 2 cents about you. And the DIIs who are investing in India were sitting at minus 4.9% Indian rupee and 2.3% on the overall market. So yes, we should be doing better as the fastest growing economy. We should be doing better, but there are a lot of stupidity that happened last year, which will change. Right, first thing that they need to change is the LTCG, STCG, STT in the budget, and INR is already ready, liquidity is already ready, everything is ready, GST is cut, but the tax is not good, and the confidence in India is not coming yet, and that is the problem that is getting created with this entire economy. Right, chalo, that is it for the market of how India did in the last year. Now let's look at the future, 2026. India will do better or not, God knows. Okay, maybe it'll be a very flat year or maybe a normal year. I don't expect it to be a crazy year in India. There's no reason why it should be a crazy year. We're not doing anything great. But let's look at the commodity cycle that is doing very great right now. Now, a lot of people are asking me questions on, Shashank, whether we buy gold, silver, what do we do, copper. These are the couple of things that are going on in people's mind. Now, this is a common problem of retail investors. They always want to buy at the top, even though they know multiple times that they will lose money when they buy at the top. A lot of people want to buy at the top. Till last year, nobody even was talking about silver. Now, suddenly, because silver hit all-time high, everyone wants to buy silver, including you guys, right? Same thing with gold, same thing with silver. And then it falls down 10%. Then they are like, Shashank, why did it fall down 10%? So please understand, if you are investing in it on FOMO, you're investing at the peak moment. Okay, so don't do that. Let's look at it structurally. What is happening from a structural standpoint? Now, that is why reading is very important. Now, if you read, so I'll only read for you. There is a Goldman Sachs report that came out very recently on, no, not this. This is the report. Okay. So this is the report I was just reading in the flight yesterday. They came out with this report on how to ride the 2026 commodity views. Okay. Basically, I'll tell it to you in simple format. Obviously, this document is quite complicated, but basically what they're talking about is that the commodity index in 2025 gave a return of 15%. Basically, commodities did really well, okay, which is your gold, silver, copper, metal, whatever it is. They did very, very, very well in the year 2025, and most likely they will do better also in 2026. It is not going to stop. But which commodity will do better is what we need to look at, okay? Now, what are they saying? Upside to China and emerging market central bank gold reserves from diversification. China leads refining of critical minerals while US has more data center capacity. So if you look at data center capacity, US is better. If you look at rare earth materials, China is better. This is something we already knew, right? And here you can see a short-lived 2025-26 oil supply wave, but a long-lasting and large LNG impact supply wave. So what this basically says is for LNG, the prices will be very muted because there is too much supply into the market. If you look at the LNG, which is the blue graph, you will see that in the next few years, there is huge amount of LNG supply in the market. So oil prices and LNG prices most likely will continue to remain low, which is a net positive for the economy, right? We will come to gold, silver, everything we will do. Give me one sec. The gold rally accelerated in 2025 as both sticky high conviction buyers, ETF investors, and central banks started competing for the same limited amount of gold. So not just central banks, but also average investors like me and you started buying. But if you actually look at how many people actually bought gold from 2022 to 2025, the amount of gold bought by central banks were far, far, far more in metric tons as compared to, let's say, the average investor, right? So the whole gold rally, please understand this again, the whole gold rally is dependent on central banks. It is not dependent on anything else. Please understand this. I'll tell you why. The minute you see news like central banks are slowing down on gold purchases, that is the time when your gold rally is going to get over. I'm not saying it has started to get over, no. But the day you understand that central banks are slowing down gold purchase, please understand that that is the day the gold rally is going to go and you can take some profits out of it, right? Now, what they are saying, Goldman Sachs is saying, we expect central bank gold buying to remain strong in 2026, averaging 70 tons per month, close to its to a 66 tons 12-month average, and 4 times above the 2022 average. Means it is going to continue with central banks with the same level of buying. They're going to continue, and they will keep going up as well. Now, a good question. Somebody is asking, will central banks ever sell their bullion? Ideally, they would not sell the bullion unless and until they're really in a bad problem. They would never want to sell bullion, right? They will always keep bullion because you can print currency based on bullion, and having this is always going to be an advantage, right? But over the next 1 year, there is going to be continuous buying according to Goldman Sachs. Again, this is their report, but they're usually right in most cases. But there is going to be a lot of this. And why did this all happen? Why did this gold buying happen suddenly from all central banks? This all started with the freezing of Russia's reserves in 2022 during the war that happened because of geopolitical risk. And now gold reserves as a share of central banks have become very big, because earlier PBOC, which is the Bank of China, had very low gold reserves as compared to everyone in the world. And because China is now becoming the next big hub, they said we need to improve our gold, and they have started buying gold as crazily as possible, right? So that is basically what is going to happen. I'm not going to talk about LNG because I don't think you guys want to know about the LNG part. um, this is also interesting. Yeah. So here what it's saying is commodity supply is concentrated in the market. That means very few people hold most of the supply in the world when it comes to commodity. For example, cobalt is mainly available in DR Congo. Coal, where China and India are the two players that are really good in coal, and that is why you see Coal India also doing really well. For LNG, you have the oil producing nations. You have US here, you have Russia for crude oil, and you have Australia as well. In fact, there is also a very good video you should go and watch online. There was a video by Sky News as to why US is going and attacking Venezuela right now, and why it is so important. It is not because of the Maduro guy. It is actually for the oil reserves that they have, because they have large oil reserves, which are not the light oil but the strong, that black heavy oil, and that is something that US really wants, and that is why it is going to attack Venezuela very soon. But again, coming back, this is what it is. I'll talk about copper and all of that coming down. There are a lot of very interesting. Yeah, copper is here, right? So 2026 ex US deficit supports the copper forecast as well. So basically, there is a deficit in copper. Now copper is something that is going to be used everywhere in the future, and there is a deficit that is again getting created in copper, which will carry forward to 2026, which seems like a very big rise can happen. So here you can see the copper price has rallied from 10,000 to 11,000 on expectation that copper inflows into US ahead of tariff on refined copper further will reduce the US ex inventories. So a lot of buying is going to happen as well in copper, because US wants a lot of the minute the tariff uncertainty goes away, copper price will start stabilizing it instantly. Okay, got it? Understood? Yes. So please understand all of these things that are happening. So for a lot of people saying copper, 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 please understand that copper price is going up because US is buying a lot of copper because they had a deficit, and that is also because of the tariff war that is going on. The minute the tariff war goes away and they clear their deficit, the copper will start stabilizing as well. So copper prices can actually consolidate. And here it says we forecast both X of it. Yeah, can you guys see me now? For some reason, the can you guys see me now? Can you all see me? Yes. Okay. Continuing. So what Goldman Sachs is saying future, copper is still the most valuable metal that you can see, right? Because it is going to be used for a very long period of time, and a lot of people are going to go through it, and that is why it's the favorite industrial metal. And why is this the case? Because electrification, which drives nearly half of the copper demand. So most of your copper demand is coming from electrification. Is it still lagging? Okay, one sec. What is going on today? Let me connect to another Wi-Fi. Give me a second. Yeah, can you guys see me now? Can you all see me now? Okay, this is very weird because it's happening first time in like many years. Okay, all of you guys can see me now. Is it clear? I had to come on mobile Wi-Fi because Act is acting funny in Bangalore. Okay, so most of the copper demand that you see today, half of the copper demand of the world is only coming from electrification. Now, what do I mean by electrification? This is happening also in India. This is happening in US. This is happening in China. Every single place electrification is happening, and that is why most of the copper demand is. The minute electrification starts reducing in the world, then it is going to become a problem as well, right? So please understand, this is going to be the difference of copper. So for all the people who are looking at copper prices rising, it is because of the electrification of the world. And here they talk more about it. Structurally strong demand growth as copper mine supply faces unique constraints. Because copper is so critical for strategic sectors such as AI, power grid, and defense, we believe price sensitive China strategic stockpiling would keep floor under copper prices if the global growth is weakened. So again, there is some problem with the supply side of this, but demand is going to keep going. And meanwhile, strong supply growth, largely as a result of China overseas investment, they have gone and invested in different ores in Africa. As you can see here, they have gone and bought a lot of ores in Africa, China, Africa, Indonesia, everywhere, to get lithium from Africa and aluminium from Indonesia and iron ore from Guinea. This is what China is playing a whole different game, and they have gone into different countries and they're building their major moat right now. And this is the beauty of the game. That is why China is actually very scared. I mean, we are all scared of China. This is the main reason. As you can see here, copper remains favorite because copper is used everywhere. And where is it used the most? Copper is mainly used in grid and power supply, not in data centers. Data centers, barely any copper is used. Renewables, little bit, but most of it is coming only from the grid and power infrastructure. And this is going to go up as well, right? Beautiful, right? Then I'll show you about silver and gold as well. Give me a sec. We expect power spare. So one more beautiful thing, that China has gone way beyond their power capacity, whereas US is not even close to their power capacity. So that is a beautiful. Oil is going to be in surplus in 2026. US poor guys built so much oil and they could never sell it. So oil and natural gas is going to suffer. Yeah, I think that's it. Where was silver? Silver is very structural. It's not there in this video. So copper, yes, will do well. Gold, yes, because of constant buying is going to do well. Goldman Sachs has not built a report on silver because silver is very short-term volatility. It is only happening because of demand-supply gap, only because China is creating the demand-supply. That is why I'm very bearish on silver. Not bearish as such, but I feel it's a very short-term rise and fall, whereas gold and copper are more long-term, structurally aligned to win. So I would rather go on that. This is why reading is so important to understand when the rally will stop. Also, now I know, right? Now, obviously, you guys watch this video, so you would know as well. And Goldman also released another report at the same time. So talking about 2026 and how a broadening bull market is going to be created, mainly on the tech stocks as well, right? So despite the intense investor focus on AI, this has been a good year to diversify, because they're saying that everyone is investing in AI as well. So they want to start investing across geographies. And Goldman Sachs has basically said, stay invested and diversify with an increased focus on emerging markets like us. But what is happening is, because we are not giving a favorable outcome to the emerging market nations, countries like Greece, countries like Brazil, countries like Korea, they are taking all the FII money, and India is basically not doing well. And look at this, nearly all major equity markets have outperformed US in 2025 in local and USD terms, except India, sadly, who has underperformed even the S&P 500. So this is basically what has happened. And that is why the money is also moving into these markets. The money is not moving into our markets, right? So this is why reading these reports are so beautiful, because it gives you a very structural idea of what is going to happen. Yes, these reports are very complicated. It is not for the average Joe to understand very easily. It is more for fund managers to just sit and read as much as possible. And that is what I keep doing every day, to just understand, boss, what is happening in the world? Where do we go? Who's doing well? Who's not doing well? What are the risks? Cyclicals are outperforming defensives. So many beautiful games are being played across the world. And that is why we should not just sit and only look at one country. We should look at every other country and how we can invest across different regions as well, right? So that is basically what today's episode was. So if you ask me again about copper, gold, and silver, I will say gold and copper are still structurally strong for 2026. Copper might consolidate in the mid of 2026. Gold, I think, will still go up. I think Goldman had given a target of gold also, if I'm not wrong. Um, they, I think they had said 4,600 or 4,000. Yeah. So Goldman has given a target of 4,900 by December 2026. For people who want to know what does that look like in actual terms, gold is currently at 4,331, but the target given is 4,900 by the next year, which is not a very big rally, honestly, because it has gone up much more in the last 1 year. But basically, Goldman is saying it should go up another 13%. Gold should rise in the next 1 year. Even if it doesn't rise 13%, with the central bank still buying gold, I believe that it should continue to go up, at least to 4,500, 4,600 by next year, right? Silver, again, very conflicting. It's only going up because of your China. The day China removes that supply constraint, it'll again go back to being normal. Uh, Uranium proxies, yes, uranium proxies again are, see, again, understand why uranium proxies. You might have seen some reel or something, I'm pretty sure, or you actually read about it in the US market. What is happening in the US market is because of the power supply constraint that is happening in the market, people are going to nuclear power, which is uranium. That is only because they cannot afford to do the electrification, because US is not going fast enough with electrification because of global supply restraints, and uranium is there, so they're going for nuclear power plants. Again, that is a stopgap solution. The eventual solution will not be uranium, the eventual solution will be renewable energy only. So that is what it is. So that is how it is being played right now. So be careful on uranium also. But see, it's very difficult for someone like me and you sitting in India to invest in uranium assets, right? Me and you can't do it. If I transfer money into IND money or vested, I have to pay TCS, and then over there's very limited options. Even for copper, there is very limited options to invest. Yes, Argentina market, Brazil market, I can still indirectly invest via ETFs, via IND money, and all of that. But it's still very difficult to do it from a structurally easy standpoint. And obviously, I'll have to pay a lot of tax also. I just saw on Twitter that US captured Venezuela's President Maduro. So that means all the oil reserves are gone. In fact, I strongly suggest you guys watch that video. um, I'll show you which video I'm talking about. Okay. Yeah. This video by Sky News. Okay. Beautiful reporting this is. Okay. This video by Sky News, the real reason why Venezuela matters. And here it actually talks about it. I'll show you, right? So there are, in very simple terms, because you should understand macroeconomics, which is so beautiful. And I'll show you how, I'll just give you simple understanding. Okay. So there are three types of oil that is usually created in the market. There is light oil, medium oil, and heavy oil. Now, US basically has a lot of light oil from their Shell corporation that does shell fracking. They get light oil. But the problem with US is most of their refineries, like how we have Jamnagar, most of their refineries only refine heavy oil, not light oil, right? And where are the refineries also? I'll show you. They've shown it in this map, such a beautiful video, that most of the refineries are here in US. Look at this. There's one in Canada, and most of the imports of heavy crude oil are coming from Canada. California is where little bit of oil deposits are there, but most of the other refineries are over here, and Venezuela is right down here, right? So this is again primary equipped for heavy oil, but they don't have heavy oil because all the US oil over here is light oil, which is this, which is so sad for them, right? This is so beautiful. And look at this. Now US is importing heavy oil, even though they're producing so much light oil. US imports of oil by crude type from 1984 to 2024, almost 70% of their import is heavy oil. And now they're paying a lot of money for these imports as well. And that is why, if you look at Venezuela, Venezuela only and only has heavy oil. Very few countries produce heavy oil. You know who are the countries? One is Canada, which they're getting oil from. One is Venezuela. And the third one is basically Russia. Obviously, they're not going to go to Russia and say, give me your oil, because Russia is not going to give it. And that is why they want Venezuela so bad, because they already have all these refineries ready. And if they get Venezuela, all that oil comes into US. And this is that same old tactic of US, that they always go and attack a country for oil, and suddenly they'll blame that country and say that country is bad. And this is how US oil imports look like. And look at this. If you look at the crude oil imports to US by country, Venezuela basically stopped giving them oil completely. And that is when you see in 2020, when Venezuela stopped giving them oil, that is when this whole attack over Venezuela came in by US. And now they've gone and captured the president as well, which is so sad. And who has the most oil in the ground that is not yet mined? That is oil in the ground that is not, it is still not even mined yet. Venezuela is the highest oil reserves by country. So if US basically gets Venezuela, they become very, very, very powerful with respect to oil. And that is why China is going completely opposite. And China is going into a zone where they're saying, we have critical minerals and we have renewable energy, and eventually oil will go away and we will be playing the next decade of victory, right? But see how beautiful macroeconomics is. So beautiful, right? This is what the game of macroeconomics is. Now for obviously it is not something that you guys can sit and constantly look at, but this is what I literally sit and read, because I love reading all of these things, right? It is so beautiful. I keep reading so many different news articles and YouTube videos just to understand everything about this. But the only problem is the oil supply, as you guys know, is too much in the market, whereas the demand is too less in the market, and that is creating a mismatch in the entire market, right? So again, coming back to today's theme of the video, which was commodities. Yes, copper will do well over a long period of time, at least for 6 months, and then there will be consolidation. But over 5 year periods, copper will rise. You talk about gold, gold will structurally rise always. I think maybe as long as central banks are buying, I think gold will continue to rise. Silver maybe will lose momentum very soon. The day China turns its stance, silver will lose momentum. And yeah, I think that is it. So I hope you guys enjoyed this video. It was straight to the point. I didn't want to waste anyone's time. Sorry for the interruptions in my weird act Wi-Fi. I don't know why it acted funny today. But again, I hope you guys enjoyed this. I hope you guys like this. And if you have any more doubts, any more questions, please put it in the comment section below. As you guys know, I will keep answering them as well. I'll see you guys next week. We enter 2026. Again, a big happy new year to all of you guys. And hopefully 2026 is a better year. Doesn't seem like it. I think until budget, we will not see FIS coming back in. The day FIS start coming back in, we will see a massive bull run happening in the market. So be ready for that. Okay. Chalo, take care, guys. See you. Bye bye.